Hello, grade 12s. Today I'm focusing specifically on accounting. So, my accounting warriors, here I am. I know you guys have been on my neck waiting for a accounting lesson. So, here we are finally. So, today I just want to be specific and focus on the statement of financial position, right? But I won't be doing the whole thing. I'm just going to be focusing on certain parts that I feel like you guys need some help with, right? So I'm just going to be focusing on the non-current liabilities, which is the long-term loan. Né? So I'm just going to show you now that based on the information that you are given, how you should just maneuver around the question of the loan and how to record it basically in your balance sheet or statement of financial position. So, okay, I've already highlighted the information that we have to deal with in green. Né? So basically, we have a loan from certain bank, right? So what we are going to do now is, and this is what you should always do, we are going to have the following. And you are not restricted to just doing it this way. You can also do it in a T account. So I'm going to have now my balance at the beginning, right? So this is my balance at the beginning for my loan. Then I'm going to have my interest capitalized. So this is now all the interest that I will be charged for taking out a loan. And then I will have my repayments now. So these are usually my monthly repayments, and which are inclusive of interest, right? So the interest is included within my repayments. And then lastly, I will have my balance at the end of the year. At the end. So okay, let's just dive into it. I am given now my balance at the beginning and my balance at the end within this question, right? So what you are gonna do, I'm just gonna punch it in here, né? So I'm gonna have 1,280,750. That's my balance at the beginning because I'm going from 2021 to 2022. Then I will have now my balance at the end to be 1,159,000. So okay, we also have now adjustments, right, regarding the loan. But then before I even go there, my balance was 1,280,750 at the beginning of my financial year. Then at the end, it is now 1,159,000. So it has decreased. That means I've made repayments, right? So we are basically going to have to account for that, either interest capitalized or repayments. And as I said, it's based on what you are given. So let's see. Here we are, loan certain bank, and then they say all transactions with respect to the loan were recorded. So nothing went unrecorded. Everything was recorded, right? So now the second one, they say interest of 142,250 on the loan is capitalized. So this is how much interest we were charged and we were paid basically, and we recorded, right? Because the first one says everything was recorded. And then from here they say a fixed monthly installment which is including interest was paid in full. So this is my repayment, and as I said, they do include interest, right? And if they do not include interest, it's just gonna be told to you. Yeah? So these are my repayments, and now they are telling me that I have made repayments, but they are not telling me how much I've repaid. So we can see that this is what we are gonna have to calculate now in this specific question. And then lastly, they say the capital portion of repayments will increase by 10% over the next financial year. So now the capital portion of repayments. Now this is my current portion on loan. Okay, but I'm gonna deal with this at the end, right? So let's see. I have an interest of 142,250. So let me just fill it in here. My interest capitalized is 142,250. But then, as we have discovered that we have to now account for repayments, right? So I know that to get to my balance at the end, I would take now my balance at the beginning and I'm going to add my interest capitalized, right? And then from that amount, I'm going to subtract my repayments and it will be equal to now my balance at the end. So in accounting, we have this thing whereby if we are looking for something which is in the middle, right, within our calculation, and that's because now we are not using a T account, something that is in the middle now, what we are going to do is that we are going to work backwards. And when you work backwards, basically the signs of everything will change. So now I know that I have my balance at the end of 1,159,000. So I'm also given now my interest capitalized and balance at the beginning, but they have positive balances. But as a way of me trying to calculate now my repayments, I will have to change their signs. So I'm gonna give them negative balances. So I'm gonna subtract 142,250, and I'm also gonna subtract 1,280,750. So you can just punch in your calculator with me. So now I'm gonna get I get an amount of minus 264,000, right? And it's gonna just sit right here. So now let me just change color so you can see that it was the amount that we were calculating. So it's 264,000. But also, please be savvy of the fact that it includes interest, this amount, né? This big amount. Let's go. Okay, so now we basically have everything, right? We now have to record. So how you will record basically in your statement of financial position as at the end of the year is the following. So we are going to start under my non-current liabilities section. And then that's where I will have my loan from a certain bank, right? So basically what will go under here will be now my balance at the end, sub less my current portion on loan, right? So that's what's gonna basically go under there. So I know my balance at the end is 1,159,000, and I'm gonna less my current portion. Current portion on loan, but I do not have it now, right? So let us look for the current portion on loan, and information regarding the current portion on loan is given here at the end. So let me just read it again. They say the capital portion of the capital portion of the repayments will increase by 10% over the next financial year. So now a way that we calculate the current portion on loan is just simply you taking your repayments that you have made throughout the year and then subtracting your interest capitalized. So okay, I had now repayments of 264,000 that I made, and they were inclusive of interest, right? So they were including interest. So I have to remove interest from that amount, so which will be 142,250. So let's see how much it gives us. So 264,000. Guys, I don't have a calculator on my screen, so yeah, I'm just punching in my calculator that I have with me here. Minus 142,250. That's an amount of 121,750. So basically, this is my current portion on my loan, because it's the capital amount. So when we are talking about capital amount, that's basically the amount that we owe that does not include interest, basically. So it's an amount that does not include interest. So okay, we are told that this amount that we have calculated, so this, as I said, this is my capital, this is my current portion on loan, or my capital portion of my repayment, right? It's going to increase by 10%, you know. So now, if it's going to increase by 10%, it is just going to be just going to be 12,175, right? So to get now my new amount, I'm just gonna say 121,000 plus 12,175, and it's just gonna be 133,925. So this is my current portion on loan. So basically, your current portion on loan just tells you, okay, from now my non-current liability, so from my long-term loan, how much am I going to repay over the next 12 months? So basically, over the next financial year, how much am I expected to repay, right? And in this case, as we have calculated based on our given adjustments, is 133,925. So let's go back to recording in your statement of financial position. So as I said, under your non-current liabilities, your loan from certain bank, let me just write bank here, will be now 1,159,000, which is your balance at the end, and you're going to less now your current portion on loan, which we found to be 133,925, right? And it gives us an amount of, let me just punch in quickly, 1,159,123 minus 133,925, and that's 1,025,075. So this is what will go under my statement of financial position, specifically under my non-current liabilities. So under my current liabilities, okay, let me change color so I do not confuse you guys. So under my current liabilities now, that's where I'm gonna have my current portion on loan. So I'm using what's this? I'm just using letters now. So please guys, do not use letters, just write the statement the way it is, the full phrase. So we calculated it to be 133,925. So this is basically what how you are supposed to deal with a loan, basically based on the information that you're given in a nutshell. So I just want to leave it here. I don't want this video to be over 15 minutes, but I am going to look at another example and you will find it in the next video. So thank you for watching this one. Let's see each other in the next video, where we'll be looking at another scenario now regarding our loan. So thank you guys, have a nice day.
Part 2 will be discussed in the next video. For now, subscribe and go practice mathematics. You are writing paper 1 on the 3rd of November, in case you forgot. Are you still here? I'm gonna have to tell your teacher that you're busy lazying around. Follow me on Instagram at Tsebo's Tutoring Academy, then go and practice mathematics.